This week we found that Meta might be fined a grand total of $960 million by Italy over alleged tax breaches. As reported in Reuters, quote, Italy claim that 887.6 million euros or $961 million from Meta and 12 million euros from X and around 140 euros from LinkedIn. These figures are under the investigational period from 2015-2016 to 2021-2022. Depending on the case, and the tax advisory notice suggests that these covers those years, which claims are set to expire, namely the 2015 to 2016. It seems that the fine is over the fact that whether Meta should or shouldn't pay value-added tax or not, as Mark Zuckerberg, the CEO of Meta in the last year or so, has aligned himself with Trump. He is likely to be hoping that the US government can help push the EU countries to not charge or not prosecute or not go after Mark for this money, because of course it is a huge amount of money. You know, we're talking about just under $1 billion in that respect, as well as it's possible that Trump may, quote, use freedom of speech grounds to say that Meta should, like other tech companies, should not be fined for not paying the value-added tax on their services. And there's lots of clever loopholes that some of these companies do use to pay. For example, I was always told the Nike argument specifically. So Nike's the obviously well-known logo, but they will charge a subsidiary company of theirs to use their logo, and then charge that licensing fee to, say, for example, a business that's based in the Cayman Islands will own the rights to the Nike logo, so Nike Cayman, for example, and then it will charge at the end of every tax year, or then charge a licensing fee to Nike UK, Nike Europe, etc., to then get them so that they're actually not in profit, which means in turn they won't have any eligible tax, because technically they would have made a loss on paper because of that licensing payment. So it's a way of profit shifting or moving profit to a different tax jurisdiction to that corporations do. Amazon do it, Starbucks do it, Amazon do it, and of course Meta and these other publications also do it as well. But as reported in the Social Media Today article, quote, earlier this month we newly appointed chairman of the US Federal Trade Commission, the FCC, publicly criticised the European Union's Digital Service Act, which he says cannot be imposed on American free speech transactions. So the concept is, in some ways, you could say that a lot of people are, or he's implying that because it's an American company, they should be protected under free speech alignment, and they shouldn't necessarily have to, pay that value-added tax on that transaction specifically. Meta currently has to wait 60 days before it can appeal the Italian fine and kick off the dual Pacific process to go after the fine, as I explained, specifically with profit shifting. So this is a way of, quote-unquote, getting around it. So this is clearly governments going after wherever they can, specifically the tax revenue that they believe that they should have access to, and they believe that they should be going. Does that say something more about where we are in the overarching world economy and how economies are doing? Or are we looking for maybe more quote-unquote challenging times in this larger conversation that's happening with the overarching economies in general, but especially in the UK and the US at the moment? I feel like the only things we're really discussing at the moment is the economy and how people feel, the cost of living, that kind of things. But I would love to hear what you think in the comment section down below. Do you feel that this is fair for Italy's government to go after Meta in this way and get them to fine and potentially pay up in regards to that VAT tax? Or are you more on the US side of things, which is saying that, look, it's a US company, why would it pay specifically tax in a European region? Love to hear what you think in the comment section down below.